I think Jean was a little nervous that everybody's going to be watching basketball, so thanks for your show of support.
The Bulls aren't playing.
Oh.
Literally, the Bulls are not playing.
Yeah. There may be more than one person who's new to learn. Raise your hand if you've never been to learning at the library before. All right. I think most of you have. I just wanted to take this chance to introduce a couple who are new to our community. Bonnie Kay and Randy Baldwin moved to Maynard in December, and they're serving as our pastors at St. Paul Lutheran Church in Maynard. Live in the parsonage just across from the church. And we're really happy to have you in the community, and thanks for coming tonight.
We're happy to be here.
Good. Yeah, so say hi to Bonnie Kay and Pastor Randy and introduce yourself. Thanks again for coming to Learning at the Library. This is our last in the series for this academic year. So that I don't forget at the end, I wanted to let everybody know that this is officially National Library Week. And next week is National Librarian Appreciation Day. And so the library board here at Maynard Community Library, we're going to host an open house, a cookie reception next Wednesday. So our normal Wednesday hours are between 9 and noon on Wednesday morning and between 1 and 5 Wednesday afternoon. And so we'll have coffee and cookies that day, but if you could stop in and thank our library director who's been serving us for 26 and a half years. Hard to believe that such a young woman could have been with us that long, but so you may see these.
And she likes it so well she moved closer to the
She's still going to drive.
So you might see these posters around town, but if you know of somebody who has never been in our library, we've been in this building for 7 years, is that right, Leslie?
Yeah.
If there's somebody who hasn't yet stopped in to see what all we have to offer, I encourage you to invite them to come with you and
It's 8 years. It's 8 years.
8 years.
I was like,
great.
8 years in June.
So next Wednesday you're invited to stop in and shake Leslie's hand, have a cookie. So tonight, our presentation is called Ups and Downs, the History of the Stock Market. Our speaker is Jean Holtz. And ironically, it's quite a hot topic. We talk
I mean, who hasn't been talking about the stock market the last 3 days?
So actually, Jean was going to do a presentation last spring, and we invited our foreign exchange student at West Central to come and take that spot. And so Jean was bumped a whole year, but timing is perfect, I guess. So let's welcome Jean and see what he has to say.
So thank you very much for coming. I'm really happy with the big turnout here. But as we said, I mean, who isn't talking about the stock market? So it's pretty relevant right now. Just a couple caveats, and I thought Carol would cover these because she gave me a couple rules.
Are you related?
For one thing, I'm not a certified financial planner. So if you think you're hearing financial advice from me, you're not. I guess because I'm not taking any responsibility for financial advice here. And I think secondly, as I think most financial planners will tell you, past stock market performance does not ensure future results. So we are going to be looking at some of the results of the stock market in the past, but don't take that as, well, this is going to happen in the future, again, because just the last 3 days kind of show us it's kind of unpredictable there. So I think we need to decide, so are we bulls here tonight, or are we bears? So who's in the bull camp? Who's in the bear camp?
Define what they are.
In a minute we will talk about that. Historically, my family has always been in the bull side, and so I brought this picture. This is a picture of our daughter Emily and Carol's sister Robin, and that is the actual bull that's on Wall Street in New York City. So we're more of a bull family typically. Here's what I kind of like to cover tonight. Origin of the stock market, some definition of terms, just so we all know what we're talking about. Historic stock market returns, then stock market events. There's been quite a number, I'm sure many of you can think about major things that have happened in the stock market, even in our lifetime here, but we'll talk a little bit about those in a little more detail. And then we have kind of a fun thing to do. Carol and Leslie were really on top of their game because on January 1st of the year 2000, they have bought you all stock certificates. And so we can see how much they have grown in the last 25 years.
So nice of us.
So they invested $1,000 on behalf of every one of you 25 years ago. And whoever has appreciated and valued the most will be the grand winner tonight. So I'm going to ask Carol to hand these out. She's going to give, there'll be one per couple. Sorry, it's there, one per couple, and then each individual, there should be enough here for everyone. And just come back up here if you need some more. I've got a couple more. Oh, let me see that. So do this randomly. Pull them randomly out of here. I don't have them.
I'll shuffle them.
I don't have them shuffled.
All right.
But what you will see here is, you'll see $1,000 invested in a particular company, and it was purchased on January 1st, 2000. Okay. I have a lot of, as you see, I have quite a bit of content here, so I'm going to go fairly fast. But feel free to stop me anytime you want if you have any questions. I'd like to start off with a little YouTube video that describes kind of the origin of the stock market. Stand by, Lene. Is it up there? It's working. So just a quick little quote there.
In the 1600s, the Dutch East India
Sound okay?
employed hundreds of ships to trade gold, porcelain, spices, and silks around the globe. But running this massive operation wasn't cheap. In order to fund their expensive voyages, the company turned to private citizens, individuals who could invest money to support the trip in exchange for a share of the ship's profits. This practice allowed the company to afford even grander voyages, increasing profits for both themselves and their savvy investors. Selling these shares in coffee houses and shipping ports across the continent, the Dutch East India Company unknowingly invented the world's first stock market. Since then, companies have been collecting funds from willing investors to support all kinds of businesses. And today, the stock market has schools, careers, and even whole television channels dedicated to understanding it. But the modern stock market is significantly more complicated than its original incarnation. So how do companies and investors use the market today? Let's imagine a new coffee company that decides to launch on the market. First, the company will advertise itself to big investors. If they think the company is a good idea, they get the first crack at investing and then sponsor the company's initial public offering, or IPO. This launches the company onto the official public market, where any company or individual who believes the business could be profitable might buy a stock. Buying stocks makes those investors partial owners in the business. Their investment helps the company to grow, and as it becomes more successful, more buyers may see potential and start buying stocks. As demand for those stocks increases, so does their price, increasing the cost for prospective buyers and raising the value of the company's stocks people already own. For the company, this increased interest helps fund new initiatives and also boosts its overall market value by showing how many people are willing to invest in their idea. However, if for some reason a company starts to seem less profitable, the reverse can also happen. If investors think their stock value is going to decline, they'll sell their stocks with the hopes of making a profit before the company loses more value. As stocks are sold and demand for the stock goes down, the stock price falls, and with it, the company's market value. This can leave investors with big losses, unless the company starts to look profitable again. This seesaw of supply and demand is influenced by many factors. Companies are under the unavoidable influence of market forces, such as the fluctuating price of materials, changes in production technology, and the shifting costs of labor. Investors may be worried about changes in leadership, bad publicity, or larger factors like new laws and trade policies. And of course, plenty of investors are simply ready to sell valuable stocks and pursue personal interests. All these variables cause day-to-day noise in the market, which can make companies appear more or less successful. And in the stock market, appearing to lose value often leads to losing investors, and in turn, losing actual value. Human confidence in the market has the power to trigger everything from economic booms to financial crises. And this difficult-to-track variable is why most professionals promote reliable long-term investing over trying to make quick cash. However, experts are constantly building tools in efforts to increase their chances of success in this highly unpredictable system. But the stock market is not just for the rich and powerful. With the dawn of the internet, everyday investors can buy stocks in many of the exact same ways a large investor would. And as more people educate themselves about this complex system, they too can trade stocks, support the businesses they believe in, and pursue their financial goals. The first step is getting invested. Interested in pursuing your own financial goals? Download a free audio version of The Richest Man in Battle.
Stop.
Okay, do we need to go any farther? Is that enough? Do we need to learn anything more about the stock market?
Maybe.
Okay,
May I interject?
yes.
Along with risk being taken, another business began to boom to help people spread that risk. And it began at the same time, in one of those coffee houses that you spoke of was in London, a public house, better known as pubs, called Lloyd's of London. And it was the beginning of the insurance industry. Followed simultaneously. Spread the risk, that's what insurance is about.
Yeah, very good, thank you. So how many of you own stock? How many of you are going out and buying and selling stock on your own? Okay, good. I missed one bullet here. I said I wasn't going to give you any investment advice, but I'm more than happy to pass on what Warren Buffett has to say about investment advice. You all know Warren Buffett, one of the probably most famous stock market investors there is, and probably one of the best. So he's usually pretty generous with giving his advice. So I captured a few things that we'll talk about toward the end. First, just a couple recap things from the video we watched. I really look at already in the early 1400s is when some stock trading already started to happen. Anytime you have trade going on and an accumulation of value in any particular product, I mean, you really have the stock market, don't you? If anybody's buying something that's going to appreciate in value, and that's what was happening in the late 1400s with Antwerp. Antwerp, Belgium, at that time Antwerp was the international hub of international trade. And as the video said, the Amsterdam Stock Exchange was the very first stock market that was put in place to trade the very first publicly traded company, which was the Dutch East India Company. And I just find this ironic that as we're talking about global trade now and trade tariffs all over the world now, it's interesting that the very first company was actually a global trader of merchandise. And that's what we're really still talking about now, is the international trade of products. And it's just interesting that it is a trading company that was the very first publicly traded company. Here in the United States, it was in the 1700s that a group of people started meeting daily to sell and buy stocks in New York City. That eventually became the New York Stock Exchange, where the bull is now, where you saw Emily and and Robin standing in front of. By 1896, the Dow Jones Industrial Average is created with 12 companies. All of you familiar with the Dow Jones Industrial Average? Today, that's now an index of 30 industrial companies. Companies like IBM, the Dow Chemical Company, Home Depot, Apple Computer. So there's 30 of those companies that the Dow Jones Industrial Average track, which is kind of gives you a good broad market of what's happening in the stock market. In 1923, the earliest version of the S&P Standard & Poor's Index, and it was created tracking just 90 companies at that time. 1929, I think this is probably one of the events that most people know about. Stock market crashes after a decade-long roaring 20s. It was really the roaring 20s that probably led to that stock market crash. Usually after a bubble, there's a crash or a downturn. The S&P 500 starts tracking the largest 500 companies in 1957. 1957, good year, right? And then in 1971, another U.S. stock exchange is formed with NASDAQ, mostly more of the technology stocks that we see today are traded on NASDAQ. So just a slide on some of the key things that happened with the origin of the stock market. Stock market today. Today there's over 60 stock exchanges globally. So all around the world there's stock exchanges. The exchanges in the U.S. are by far the largest, and we'll talk about that in a little more detail. Berkshire Hathaway is the most expensive stock in the world. Who can tell me what just one share of Berkshire Hathaway Class A stock costs as of opening bell this morning? No guesses? $742,000 and $742,540. One share of stock. It's the most expensive stock in the world.
What is it? I mean,
Berkshire Hathaway is operated by Warren Buffett. He's been the leader of that company for a long time. It's really a holding company of a lot of different kinds of companies. The reason why it's so valuable is Warren Buffett is really good at picking companies.
You know what it was a week ago?
It was not that much different. You'll see this in a slide. And that's part of his genius in his ability to diversify his portfolio. One of the things that Berkshire Hathaway has a lot of is real estate. And real estate has not really been hit like some of the other companies here in the last 3 days. But it has gone down, though, for sure. By the way, how much has the stock market gone down in the last 3 days? According to my calculations, the Dow Jones Industrial Average, the S&P 500 has dropped by 21% since last Thursday. I think close to $7 trillion in value has been taken from the U.S. stock markets. Apple was the first company to reach $1 billion in market capitalization. Do you know what market capitalization is? Market capitalization, if you take all the outstanding shares of a company times the current value of each share, that's their total market capitalization. 62% of Americans own stocks. So I think this crowd is with it. I think almost all of us have. I think one thing that's really helped Americans invest in stock market, as I think appropriately, is the things that were introduced, like the 401ks, 403bs. They made it easier for us to own stock. And it's really quite easy today even to buy and sell your own stock. You can do it all online now. There's websites like E-Trade, SoFi, Fidelity. They all have sites that you don't even have to talk to anybody. You just go in there and buy and sell stock as you please. Okay. Here are some of, I think this is the top 11 stock market, exact the numbers even. The two biggest ones up there, New York Stock Exchange, NASDAQ. They're the two US markets. With a market cap of 28 and 26, and that's with a T, $trillion in value. You can see no other country is even close to the US. China, actually it's Japan that's next there, with 6.67 trillion, and then all on down. Even the combined Europe stock exchange still is only 5.68 trillion compared to our two stock exchanges. Any questions on that? Here are the 10 largest companies in the world in terms of market cap. So that's the value of these companies on the stock market. Apple's number one. And as you can see, 8 out of 10 of the top 10 are US companies. This Saudi Aramco, not much we can do about that. Saudi Arabia has most of the oil reserves of the world. So they're going to be a very large company for the foreseeable future as we continue to burn fossil fuels. But it is at risk somewhat. We are moving slowly away from fossil fuels. The bottom one, TSMC. Anyone know what TSMC is? It is. It's Taiwan Semiconductor Manufacturing Company. Taiwan has far and away the global market share for semiconductors. Wouldn't have had to be that way, but it is. Let me tell you a little bit of a story about, as soon as I can find my notes here, about Taiwan Semiconductor. And this is kind of near and dear to my heart because it's very close to where Carol and I live. It was in 1976, well actually in the earlier 70s, that the government of Taiwan decided they're going to go all in on making semiconductors. Very fortuitous on their part because they anticipated then that semiconductors were going to be in big demand all over the world. So they made the decision at that time they wanted their country to be the supplier of semiconductors. So they sent 4 teams of engineers over to the United States to be taught how to make semiconductors. What company do you think taught them? It was the Radio Corporation of America. Do you know what that is?
RCA.
RCA. RCA taught Taiwan how to make semiconductors. And now this company right here, TSMC, that company alone has 50% of the global market of semiconductors. That company alone. The reason why it's impactful to us, we lived for quite a number of years in Indianapolis. And right going north and south in Indianapolis, there's a road called Meridian. Interestingly, Meridian, north and south. We lived at 136th Street, and at 116th Street, in the late 70s, early 80s, RCA built a huge campus. And so it's quite possible that right there down the road from our house, RCA taught Taiwan how to make these semiconductors. Do you remember that? There were those great big green buildings down by the kids' preschool building. They made them green because they put them right out in the middle of a cornfield. And so they wanted the buildings to blend in with the cornfields. RCA is now a fraction of what it was earlier. They totally missed the boat. So those are the largest companies in the world. Here is the world's largest economies. And this was updated this year. Again, you can see United States, far and away the leading economy in the world. China is second. And then you can see where all the other countries fall in there. I told Carol I wasn't going to get political, but I just have to make this one observation. And I know these 3 slides don't tell the whole story, but if you were a citizen in another country, and you look at this slide, and you look at this slide, and you look at this slide, could you understand why the U.S. needs to deploy all these trade tariffs? We're head and shoulders above everyone else, but yet we're the ones deploying the tariffs right now. This also shows the impact that the United States has on the global economy. I mean, we're at the center of the global economy with our stock market, the GDP that we have, and the companies that we run out of this country. And so, I just had to add that.
Now you can relax.
I can relax now. Now, for purposes of investment and just tracking different sectors and different kinds of companies, most stock market exchanges divide all of their companies into these different sectors. So you can think about the companies you know of and where they would fall in here. In a little bit, we'll talk about mutual funds and ETFs and things like that. You can buy securities and have someone else help you manage those, and you can direct them at a particular sector if you want. For example, if you think information technology has continued to grow like it has the last 25 years, you can say, okay, I want to invest in companies that are in the information technology sector. Okay, let's talk about stock market terms. Here, I'll need your help here. Who can tell me what a bull market is? Just yell it out.
Yeah, it's positive, going after buy.
It's what?
Buy.
You're right. If you think a bull market's coming, stocks are going to go up, and you want to be in the market.
Yep, right now there should be a lot of bulls going, buy low, sell high.
Yeah. Is that investment advice?
Yes. I'm not saying what company.
What's a bear market?
They're negative and want to sell.
They're going down. Why did we come up with bull and bear market to describe the up market and the down market?
Charge forward, take a nap.
Think of the fighting style of these two animals. How does a bull fight? And if he's got the horns, he's going like this, isn't he? He's pushing up. And how does if you think of a big grizzly bear on his hind legs, what is he doing? He's pulling things down. That's right. So that's where it came from. It wasn't any more sophisticated than that. What's a market correction?
Somebody got excited about something that didn't really, the foundation really wasn't there.
Okay, what happens to the market in a market correction? It goes down by how much?
Quite a bit.
Typically 10%. If it goes down at least 10% from where it was at its height, they call that a market correction. So let me ask you this. Let's say that we have a market correction of 5 to 10% in the market. How long does it take for the stock market, on an average, to recover from that? And by recover, how long does it take to get back up to where it was before the correction? And let's say for a 5 to 10% market correction. 5 what?
5 years. Rich says one day, I said 5 years.
It's something in between. Try 3 months. 3 months, that's the average. For a 5 to 10% market correction, 3 months, it's right back to where it was. If the market correction is 10 to 20% down, how long does that take?
2.8 years.
2.8 years.
Yeah.
The average is 8 months.
Wow.
So it's not as long as what you might think. So here, if we're at a 21% correction right now, on an average, 8 months later, it's right back to where it was.
Hello.
High low. What's a privately traded company?
It's not in any stock market.
It's not in any stock market, so the general public can't buy stock in a privately traded company. Now, they may still sell shares in their company, but it's usually to venture capitalists or other investors. It's not open to the public to buy their stock. I worked for S.C. Johnson & Son, that was a privately traded company. Who do you think is the largest privately traded company in the world? Bob, you should know this. Largest privately traded company in the world. It's Cargill. And Cargill is a huge company. Koch brothers, that's another large, they have all the refineries and some ethanol plants and things like that. So what's an IPO? These are terms you know, right, or have heard of. What's an IPO?
Upstart.
IPO stands for initial public offering. So the next term I have up here is publicly traded company. So a privately traded company typically issues an IPO, initial public offering, first time anyone can buy their stock, and that's when they go public. And after that, then they are a publicly traded company. Publicly traded company, you can buy shares in that company. Anyone in the public can do that. They have to follow certain rules. They have to file the right financial disclosures. They got to follow the rules that the Securities and Exchange Commission makes for them, so that it's fair for all people buying their stock. When you go public, you're giving up some control because people are buying your stock. Now, you don't have to issue so much stock so that you do lose control of the majority of your shares, but you've got other people involved with your company when you go public. Does it ever go the other way? Does a publicly traded company ever become a privately traded company? It's happened fairly recently.
Really?
Twitter was a publicly traded company until Elon Musk came along and bought all the shares for it, and he took it private, and then renamed it X. So it can happen. What's a mutual fund?
Combination. Grouping of different investments to spread your risk on an individual basis.
Exactly right. Mutual funds, a pool of money from many different investors and spread across a lot of different companies, typically. Usually managed by some firm who decides how many shares of what companies will be a part of that mutual fund. It's a good way to reduce your risk. ETF, very similar. Exchange traded fund is what an ETF is. These have really become very, very popular because these you can direct to a particular sector in the market. Again, usually managed by a professional money, a professional broker, but they are typically tied to an index. For example, many ETF funds are tied to the S&P 500. And so what the managers try to do is track the performance of the particular index that they're matched against. So those of you who go to St. Paul's or E-Trade accounts, they're pretty much all ETFs are mutual funds. The ETFs that we've bought for the church invested over 500 different companies in each ETF that we have, most of them. We have some semiconductor ETFs that haven't done so well, but that's the way it goes sometimes. Any questions on any of those? We mentioned the last one, SEC, Securities and Exchange Commission. That's when you get caught for insider trading, these are the guys who come and pick you up. You know what insider trading is? If you have information about a company because you're involved in the management of the company and you use that information to buy and sell stocks in that company, that's against the law. Martha Stewart got sent to jail for 10 months for doing that. Have you watched the documentary about Martha Stewart on Netflix?
No.
I think she got set up.
Oh,
So, at the time, she was a billionaire. She was over a billionaire. She got sent to jail because she made a $40,000 stock trade at the advice of her broker. Who was the prosecutor who got her? James Comey. I think she got set up.
Nah.
Only after we watch it.
Only after I watch it. I'm not a big Martha Stewart fan, but I am after I watch that documentary. Okay. So now that we've got some of those terms down, here are what this presentation is supposed to be about, the ups and downs of the stock market. So this is the S&P 500 returns by year, not including dividends. So we're not reinvesting dividends in these numbers. It's just the value of the stocks. Remember, S&P 500 is tracking the top 500 companies in the U.S. This was one of the few charts I could see that would go all the way back to 1929, which is something we want to talk about. Here I am. And I think this is a good chart to look at. One of the things we're going to talk about a little bit later on, you should never try to time the market. Because I don't think anyone would have predicted what this chart would look like in the future. I mean, you can look back and see what has happened, and you can explain what's happened in the past. But going forward, I don't know of anyone who can tell you what this chart will look like for the next 70 to 80 years. And so even Warren Buffett will tell you, don't try to time the market. Because here's what can happen to you if you try to time the market. And let's just go back not too long ago. Here in 2000, if you would have invested money in January 2000, look at how much money you would have lost in the next 3 years. It probably would have taken you 6 years to recover everything you just lost in the first 3 years. If you would have invested money in 1995, right here, January of 1995, you would have made a whole ton of money in the next 5 years. But who knows that?
just to lose it in the next 3.
Yeah, just to lose it in the next 3. It's all, so I'll tell you, you should never try to time the market, but with the market, timing is everything. And I think this slide does a pretty good job of showing that. So let's talk about some significant events that are depicted on this chart. The big one, Wall Street crash, 1929. Is anybody alive in 1929? 1929, Wall Street crash, October 28, 1929. It was a Thursday. It's called Black Thursday. Market declined by 13%, which at that time was huge. Just in one day, it declined by 13%. And it drove consumer or the buyer confidence down through the floor. It is, like the video said, it's all about confidence in the economy. No one at that time then had confidence in the economy. Everybody sold. And so it was just a death spiral. So you can see, by July of 1932, 3 years later, the market was 89% below its peak. So that's where you had a lot of people on Wall Street jumping out of windows and things like that. Have you watched Titanic? I mean, all those guys were going broke while they're sailing the Titanic across the Atlantic.
That was the least of their worries.
That was the least of the worries. I didn't know that was the least of the worries.
Literally went down the drain.
Literally went down the drain. How long do you think it took the market to recover after that market correction.
Yeah.
25 years. It was 25 years before the market got back to where it was it was the peak. Let's go back this slide. I don't have an explanation for this on my chart. I wanted to look at 1957, since it was such a good year for some of you in the back there. So what happened in 1957? I know some of you were alive in 57. But what happened? How come here you can see, here's what happened after the crash. By the way, the crash in 1929, what did that lead to? A lot of banks failed, but it led to the Great Depression. And we were in that for 10 years. When did we come out of the Great Depression?
World War II.
World War II. Look right, if you look right here, kind of 1941, the start of the war economy really helped the country recover from the Great Depression. So we were kind of going along there, but then what happened in 1957? It was kind of really a down year.
I was in fourth grade.
1957 is when the S&P 500, they expanded that index to include the top 500 companies. Some people said that spurred early on a lot of buying, but then it went up during the year, and then the market crashed toward the end of the year. And some people say it was expanding that index to the 500 companies that caused that. But there's another big thing that also happened then, in 1957.
Russia.
Huge, Russia. Huge, yeah. But actually, I was thinking, there was a huge influenza outbreak worldwide. 100,000 people in the US died from the flu that year. And they said, everybody was sick. Everybody was off where a GDP dropped because people weren't working. Now we lost 100,000 people in that year. I think there's another thing what else happened in 1957? More babies were born in the US in 1957 than any other year before or since. We've never had more babies born in the United States than 1957. So it was a good year, wasn't it? So what happened in 73 and 74? A couple bad years there, wasn't it? 2 bad years, 1973 and 74. What that was attributed to was OPEC, Vietnam, Watergate. Stock market declined by almost 52%. OPEC caused inflation. There was the oil embargo in 73, if you remember that. Civil unrest due to the Vietnam War, and then Nixon's resignation. Just caused a lot of turmoil that people were nervous. Nervousness is bad for the stock market. Black Monday, October 19th, 1987. I remember this day because we started working in the early 80s. They came out with 401ks, so we were putting everything into the stock market in our 401ks. One day, the Dow dropped 22.6%. No one can explain that one. No one really knows. It started in Asia early in the day and just swept across the globe. But it did lead to the creation of those trading curves. And so trading curves means after a market loses so much, they stop trading, just to stop something like this from happening again.
Do they shut down the whole market or just in that certain area?
They'll shut down an exchange.
Okay.
And just, sometimes just for an hour or so, sometimes for the rest of the day. But they control it a lot more, just so the consumer sentiment, it doesn't go into a death spiral. So they, right, just like a run on the bank. I mean, we saw runs on the banks, don't we? I mean, just in the last couple of years. a couple banks failed because consumers lost confidence in the bank and someone else had to step in and take over the bank then. So it happens a lot. Then, everybody remember the dot-com bubble burst? So if you look at the end of the 1990s, just look at this bubble. This is about when the internet came out, and everybody in San Francisco thought they could open up a dot-com company and be successful. So a huge run on technology stocks mainly. But you can see what happened to the stock markets during those years. And then we had 3 years of bust after that. Pretty much none of those dot-com companies lasted. None, hardly any of them survived. What's one that did survive? Amazon. So whoever has Amazon, what's the name on your certificate?
Amazon.com.
Amazon.com. It's right in their name. They still have .com in the name of the company. That's the official name of Amazon. Amazon.com. What's another company that made it through the .com bubble? eBay. eBay made it too. There might be others, but I don't know what they are. In that case, the NASDAQ dropped more than 75% over 7 months, but you can see it took a long time to them to recover from the losses of that one. 2008 recession, everybody should remember that, caused by the housing bubble and subprime mortgages. They were making mortgages that they shouldn't have been making. Banks were guaranteeing them. Was it Lehman Brothers that went out of business? A number of other banks because they acquired those mortgage-backed securities. And then the coronavirus crash in March of 2020, which is interesting. So if you remember, in March of 2020, everything got shut down. Stock market tanked. The Dow dropped 37% in just a couple of months there. Crisis was resolved by the Fed dropping interest rates to 0 and Congress passing a $2.2 trillion stimulus package. Remember all the PPP money, unemployment for people. But interestingly, so that was 2000. It dropped all that. But look at 2020. It was still a positive year in the stock market. So before the end of the year, the stock market came right back and did great in 2021 again. I don't think the global pandemic really caught up with us until 2022, which was a bad year. 2022, remember, supply chains were all broken. We couldn't buy cars because they couldn't get any chips to manufacture new cars. We couldn't buy toilet paper. That was earlier in 2020, but all the supply chains just went to kaput, and so the stock market did too. But then the next 2 years were pretty good then again, wasn't it? So that kind of shows you the ups and downs of the stock market. Okay. Oh, I wanted to show you one more thing. So here's the stock market average return per year with the dividends reinvested. And it shows you what it's been for the last 150 years all the way down to the last 5 years. I mean, some significant differences there in the percentage, right? So the last 5 years really been a good time in the last 5 years. Average annual return was over 14% in the stock market for the S&P 500. But then
Must be time for a market correction then.
Probably. Any questions on this?
They had a guy on WMT I was listening to today, he said that if you bought stock a year ago today, today's price would be about the same as it was a year ago today.
So we've lost about a year.
Yep.
Yeah. So I'd say if you're in the stock market, you got to be able to stomach that. if you need money in the short term, don't put it in the stock market. But if it's a retirement account that you'll draw out 10 years from now, you're probably pretty safe, because for the last 50 years, the average annual return is 11.95%, which is pretty darn good. That's why I'm glad as many Americans as we have, 62% are invested in the stock market, because I think overall it's a great investment. So let's see how you all did. So if Leslie and Carol invested $1,000 25 years ago, what do you think our scale should go up to? Do you think $150,000 should handle it for all the stocks that you guys have? It was just $1,000 25 years ago. I mean, $150,000, that'd be a lot of money back for just a $1,000 investment, wouldn't it? I'm embarrassed to put up the first one. Oh, the Dow Chemical Company. First company I worked for, first stock I owned. It's at the bottom of the chart. So if you've got the Dow stock, who has the Dow stock? Jim, right now your stock is worth $3,547. Not bad, not bad. Who's got IBM? Oh, thank you. So, it's payday. Payday, Jim. There you go. Who's got IBM? 4,800.
Oh.
You did a little better with IBM. Who's got Bank of America? Your payday is $6,985.
We'll take it.
All right.
That's why you guys in the front row.
Who's got Caterpillar?
Do you want me to take
Yeah.
it so you don't have to?
Way in the back, your dad. Your Caterpillar, you want to guess?
5,000.
Almost 10,000. 9,938. General Motors. Forever one of the largest companies in the world, General Motors. Kathy, your payday is 11,000. General Electric, another huge old company. What do you think? 11,600. Who's got Exxon? Earhart, 12,500.
Wow.
Who's got John Deere? Back there. Lowe's, 16,853. Not bad. Meta, what's Meta? Facebook. Meta is Facebook. And just to let you know, who's got it?
I do.
You've only had it invested since 2012, because that's when that company went public. But it earned you 17,478.
Wow.
Yeah, there you go.
Works for me.
Yeah.
Microsoft,
That's us.
just like Bill Gates. Back there, the Shuffle's 24,000.
All right. Yeah.
Berkshire Hathaway,
So you're buying lunch, eh?
31,797.
Wow.
So you can thank Warren Buffett for that. ABC. What is ABC?
American Broadcasting Company.
Oh.
It's Google.
Oh.
Well, it's actually Alphabet. Alphabet, it's Google. And that's worth 66,522, and that's only been invested since 2004. So you did well with Google. All right, who's got Amazon?
Wow.
We're at $132,000. Pretty good for a .com company, isn't it? Unbragged forever.
Good deal.
Who's got Apple?
Yes.
213,000.
Oh my goodness. Remember
You did really well.
You're rich. I'm family.
Who's got Tesla? Just like Elon. $267,000.
Oh my word.
So you did notice I had to add more to the scale.
Yeah.
And Tesla, that's only been invested for 15 years. That company is only 15 years old as a publicly traded company. So it's no accident these guys are the richest guys in the world. And then, what do you think who's left?
What do you guys
Who's
know?
left?
NVIDIA.
NVIDIA, another one of those semiconductor companies. You have $944,000. So $1,000 invested 25 years ago, about $1 million.
You and the pot of gold.
So NVIDIA went public in 1999 at about $24 a share. By the end of, and then then the dot-com bubble hit. On December 31st, 2000, NVIDIA stock was worth 13 cents a share. Before all of this stuff that's happening now is $132 a share. So pretty good return for a semiconductor company.
Did everybody get paid?
Everybody got paid?
Did I miss anybody?
So thanks a lot for buying
Oh,
stock
I
for all of
missed.
us.
We had years.
Oh.
Oh, you had deer too, sorry.
I was thinking,
Yeah.
I didn't want you not to get your payday. Everybody get one?
Were you green or red when you were growing up?
Oh.
You had both, so, okay, so we're safe.
International knowledge.
Okay.
I
I did it.
think Dad had a John Deere at the end, I think that was long after I was gone.
Okay.
I've grown up with international knowledge.
Okay. So since we're in Iowa, and if you may have noticed, I didn't really put any of these charts together myself. I just pulled them obvious. All these complications are too complicated for me, so I just pull it out of the, artificial intelligence generated some of it. Some of it were just standard content that was out there on the internet. The Iowa State University did this one for me, because I thought since we're in Iowa, we should really compare the S&P 500 with Iowa farmland. So since 1980, should have you put $1,000 into Iowa farmland or into the S&P 500? Now this is a bit complicated. It's pretty straightforward for the S&P 500. They just reinvested the dividends. And then whatever the value of the S&P 500 went up, that's what it was. Even with reinvesting dividends, you do have to pay capital gains tax in the year that those dividends are paid. But it can be reinvested right into stock. Iowa farmland's a little more complicated. So the way they calculated Iowa farmland is they took the value each year of the appreciation of the farmland, Iowa average, the appreciation of Iowa farmland, plus the average rent for the state of Iowa each year. They add that to the value. But then they subtracted property taxes, insurance, because you need that, a maintenance fee for if you're going to tile that farmland, build a waterway. I mean, those expenses do happen with farmland. And they subtracted the management fee. But then you can see how the difference. It really wasn't too bad until the last 6 years, the difference. You got a puzzle look. You can take it up with Iowa State. The thing I was going to point out, again, it's kind of a timing thing. If you would have bought Iowa farmland, like right in here, through this period of time here, you did pretty good. And at about that same time, you didn't do very good with the S&P 500. You know, that whole first decade of the 2000s was terrible in the S&P 500. But then, since then, it's done pretty well. You buying it? So this is what Iowa State University Extension and Outreach have told me. You think farmland did a little better than that? What do you think, Bob? Think Iowa farmland did better than the?
What's the time frame?
Since 1980. I mean, the 80s were not good for farming.
Right, that must,
Voting it.
you probably have to, so no, seems right.
That is the problem with IO Farm. I mean, you got other expenses, kind of like any other real estate as well. It's just a lot easier to just put your money in the S&P 500.
Like the old bumper sticker used to say, legalize gambling.
Okay, investment advice from Warren Buffett. Don't try to time the market. Invest for the long term. Put your money in the market, but then just leave it there. Also invest over time. Don't put it all in at once. You can see the ups and downs, so spread it out when you're putting money in the market. Same thing with your withdrawing. You know, spread that out too. So you're not hitting the low, but hope, you know, you may not be hitting the absolute high either. Invest in America. Warren Buffett says, buy American companies, and you'll be better. Buy low-cost index funds that track the performance of a broad stock market. That's where ETFs, mutual funds, are good. They spread that risk out over a large number of companies. So your returns won't be as good, but you're down, it won't be so bad either. I mean, companies do go broke. And if you got all your money in one company, it's risky. Well, Warren says the ideal portfolio of the average investor, he doesn't care what your age is. 90% in funds tied to the S&P index, 10% in short-term government bonds. So a large percentage in the market is what Warren Buffett would tell you. And then avoid debt, especially credit card debt. Good advice from Warren?
Very sound.
Okay. So what are we now? Are we bulls or bears? Who says bulls? Who says bears? Okay, any questions or other discussion, any other observations anybody wants to make?
Well, you're a Chicago fan, born and bred, they both stink. Even their little cubs.
Yes, Brad.
Takeaway from this stock market decline is, and this isn't advice or anything, but if you've got traditional IRA versus Roth, might be a good time to roll some of that when the stock market is low. You know,
Selling stock now and
we're not
paying a
selling it.
smaller.
I'm just saying rolling it over into your Roth.
Yeah, roll it over to Roth, you still got to pay the taxes on it though, right?
The stocks are cheaper.
That's right. So your gain is not as much, so the taxes are less. It's true.
They just don't have the basis.
Yeah, yeah. I'm not a certified investment planner or a retirement planner or anything like that, or estate planner. But yeah, what you're saying has some sense to it.
But it is good advice to get yourself a good planner.
I think it's what you're comfortable with. You know, I think a lot of people have made really good use of professional investment planner. Anything else?
Gene,
Yeah.
the Dow Industrial 330, how is that determined? We add companies, we throw some out.
There's a board that makes that decision. I can't remember the name of the company, but they manage the Dow Jones Industrial Average. They decide what 30 companies are part of the index at any given time. And yes, they do throw companies out and bring new companies in. For example, Apple, it wasn't too long ago that they brought Apple into the Dow Jones Industrial Average.
So if we throw out the poor performing companies and in those good performing companies, is it a true reflection?
Good question.
It would seem to me that it is not.
It seems like they could influence the average returns, couldn't they? By what companies? You know, I haven't looked up, I don't know what all the criteria is for determining what companies come in and what goes off. But you'd like to think they've done as good a job as possible to keep that a consistent index through time. But I don't know. Yes, Lynette?
So, you know, in the movies, the old movies where they'd be in the bullpen of the stock exchange and yelling at each other and throwing pieces of paper at each other, I'm sure that's all on computer now, right?
It is.
That's too bad.
Yeah, those pits don't really exist anymore.
That's too bad. That looks exciting. I don't think.
So I was really looking, you know Trading Places?
Yeah.
I was really looking at video clips from Trading Places, but that's a movie quite a while ago. And it has a lot of bad language in.
Yeah.
So I was having trouble finding the clip that I felt comfortable showing. Any other observations, questions? So I think the speaker usually, yes.
For the more discussion, let's talk about the advice to not try to time the market. And can you put up that chart of the ups and down years?
That one?
Yes, so from time to time, we have down markets. And you have told us that if a market goes down 20%, within 8 months, it will recover.
On the average.
On the average.
On the average, a down market of 20% or a market correction will correct itself in 8 months.
So if we look at that chart, we look at the reds, the downs, it may be 1 year, maybe 2 years, as many as 3 years seems to be the most. Why wouldn't I be a buyer in year 1, year 2, or year 3? Short term, there might be more down, but obviously, following that, there's going to be ups.
I think many investors think that way.
Sure.
That, just like Baxter said, there are some opportunities out there now. Yeah, and if you look at this chart, there are most likely, if you've got the courage and you think, if you think we're in a situation like this, then you should be buying right now. If you think you're in a situation like this, you may want to hold up a little bit.
That stretch doesn't look as well, that's right.
Yeah. Now, and if you were right here,
That's too soon.
it took you 24 years for anything that you had invested in 1929. It took you 24 years, or approximately right here is where you got back to even.
Too soon.
Yeah. And how do you know? How do you know? How do you know where you are on this chart? But I think a lot of investors say now might be a good opportunity to get into the stock market. No, it's down 21%. A lot of the fundamentals are pretty, I mean, we have more people employed in America right now than we ever had before. We're at I think it went up to 4.2% unemployment. So a lot of people are working. So that means a lot of people out there have money to spend. But a lot of people are looking at their 401k. I mean, Carol and I have already talked about, well, here's some things we may not spend money on this year because of what's happened in the last 3 years. So if a whole bunch of consumers stop spending, then, I mean, that leads to a recession.
And we're talking about 62% of the people that are investing that have a little extra money to invest.
Yeah.
Then we still have another 38%.
And I'd say over 50% are living paycheck to paycheck.
And now that's going to be worse with the inflation.
It is.
We're going to go through. Sad.
Still talking about a recession coming up.
I think more and more so. JP Morgan has come out and said their estimate 60% chance of recession this year. Doesn't have to be, because I think the fundamentals are sound. If we get these trade deals worked out quickly, but if they stretch out for months and we end up in a full-blown trade war, then I think things will get worse. No investment advice, though. I am not. Okay, anything else? So I think as the presenter, I get to choose a book. And here's the book I'm choosing. It's called Trust. Has anybody read it? It's a Pulitzer Prize winning novel by Hernan Diaz. Really good book. I don't read very much, so I'm not a good critic, but I really enjoyed this book. So that'll appear sometime on the library shelves sometime in the future. And then for you Warren Buffett fans, his favorite book is this, The Intelligent Investor. If anyone wants to borrow it, I'll let you take it home tonight. Anything else? Anything else, Carol?
Thank you.
Thank you very much. Thank you. I'm not going to tell you anything about trust because it's a book you got to figure out, and I can't say anything without giving it away. And so it's an interesting book because you got to read through it a ways before you figure out what's going on. And I like that about a book where it makes you think and it makes you figure out what's going on.
It was one of our daughters gave it to him as a gift. It's not a textbook about investing. It's a novel. It reads like a novel, but it's about investment, right?
Okay.
He's like, careful.
Careful.
So we have had